The brutal truth about why traders fail. A Jesse Livermore masterclass. Most traders deserve to lose. I said it, and I meant every word. Now before you walk away in disgust, let me ask you something. Do you have the courage to hear why? I'm going to show you exactly why 90 out of every 100 traders blow up their accounts. And more importantly, how you can be part of the rare few who doesn't. My name is Jesse Livermore. They called me the boy plunger. The greatest trader who ever lived. I made millions, lost millions, made them back again. I've seen fortunes built in days and destroyed in hours. I've watched men cry on the exchange floor and others dance with champagne. And through it all, I learned one inescapable truth. The market doesn't care about your dreams, your hopes, or your bills. It only cares about one thing. Can you master yourself? Because here's what nobody tells you. Trading isn't about finding the perfect system or the secret formula. It's about conquering the 6 inches between your ears. It's about discipline when every fiber of your being screams to break your rules. It's about patience when opportunity dances just out of reach. And today, I'm going to take you on a journey through blood, sweat, and ticker tape, through my greatest triumphs and my most devastating failures. By the time we're done, you'll understand the psychology that separates winners from losers, and you'll know exactly which side you're on. Let me paint you a picture. Boston, 1891. I'm 14 years old, standing in a bucket shop on my first day of work. My job? Posting stock prices on a chalkboard as they come across the ticker tape. $5 a week. But something happened while I stood there, chalk dust on my hands, watching those numbers dance across the tape. I started seeing patterns, not just random price movements, but the heartbeat of the market itself. The rhythm. The psychology of thousands of traders making decisions based on fear and greed. I made my first trade with borrowed money, $5 on Chicago, Burlington, and Quincy Railroad. I won. Then I won again and again. Within weeks, I had turned those borrowed dollars into hundreds. I thought I was a genius. I thought I had the market figured out. Then came the crash. I remember it like yesterday. I built my stake up to over $1,000 a fortune for a kid from Massachusetts. I put it all on one position. Not half, not 75%, all of it. I was convinced I was right. The market owed me this win. The market destroyed me in 3 days. I lost everything. Not because my analysis was wrong. Not because I didn't understand the fundamentals. I lost because I didn't respect the one rule that would save my career over and over again. Never, ever risk money you can't afford to lose. That pain, that humiliation, it was the best education I ever received. Because it taught me the first brutal lesson every trader must learn. The market doesn't owe you anything. It will take everything you have if you let it. Now, let me break down the 5 deadly sins that kill traders. These aren't theoretical concepts. These are the actual reasons I've watched fortunes evaporate like morning mist. Sin number 1, overleveraging, the seductive killer leverage. It sounds powerful, doesn't it? Heroic, even. I'm going to leverage my position and multiply my gains. Let me tell you what leverage really is. It's a loaded revolver pointed at your own head. I knew a trader in New York. Brilliant man, Yale educated, could calculate odds faster than anyone I'd ever met. He came to me one day, chest puffed out, and said, "Jesse, I'm using 10-to-1 margin. I doubled my account in a week." I looked him in the eye and asked, "How many times can you double your account before you hit zero?" He laughed, thought I was joking. 6 weeks later, he was broke. Not just broke, devastated. One bad trade with 10-to-1 margin and his entire fortune was gone. His wife left him. His friends abandoned him, all because he thought leverage was a shortcut to riches instead of what it really is, a shortcut to ruin. Here's the mathematical truths they don't teach you. If you lose 50% of your capital, you need 100% gain just to break even. Lose 75%, you need a 300% gain. The hole gets deeper with every loss, and leverage makes that hole a grave. I learned to treat leverage like fire, useful in small doses, deadly in large ones. Never risk more than 2 to 5% of your capital on any single trade. Ever. No exceptions. Not for the sure thing. Not for the can't miss opportunity. Because here's what I discovered. Survival beats brilliance every single time. Sin number 2. Chasing tips and hype the fool's gold. Picture this. It's 1906. I'm walking into a Manhattan brokerage office, and the air is thick with cigar smoke and whispered secrets. In the corner, 3 men are huddled together, eyes darting around nervously. I can hear fragments. Insider information. Railroad merger. Can't lose. I watched them bet their entire accounts on that tip. The stock moved up for 2 days. They celebrated like they'd struck gold. On day 3, the stock gold. The insider information was a plant designed to separate fools from their money. All 3 men were wiped out. Now, let's talk about the wire rooms and the telegraph offices. You walk in and you hear it. This steel stock is going through the roof. Get in now before it's too late. Everyone's talking about it. Your neighbor just made $1,000 overnight. You feel it, don't you? That burning in your chest. That voice screaming, if I don't get in now, I'm going to miss out on the opportunity of a lifetime. That feeling, that's not opportunity. That's the market's way of identifying its next victim. Here's what 30 years of markets taught me. By the time everyone's talking about it, the smart money is already out at. The hype isn't the beginning of the move, it's the end. You're not getting in on the ground floor. You're buying the penthouse from someone who's about to burn the building down. I made this mistake with cotton futures in 1907. Everyone said it was going higher. The newspapers, the experts, even other successful traders. So I bought heavy, and I watched $20,000 evaporate when cotton collapsed the next month. The lesson: the crowd is almost always wrong at extremes. When everyone's buying, start thinking about selling. When everyone's panicking, start thinking about buying. The herd mentality is the market's way of transferring wealth from the impatient to the patient. Sin number 3. Refusing to cut loss is the ego's death sentence. This is the one that breaks hearts and bank accounts. I want you to imagine something with me. You enter a trade. You've done your analysis. You're confident. The trade moves against you. 5% down. It's just a temporary pullback, you tell yourself. 10% down. It has to bounce back. 15% down. I'm not selling for a loss. I'm not wrong. The market is wrong. 25% down. 30%, 50%. Now you're not just hoping for profit. You're praying to break even. You're trapped, paralyzed. And with every passing day, your loss gets worse. I've been there. God knows I've been there. In 1917, I was riding high on war stocks, making millions. Then I got cocky. I went long on certain railroads, convinced I could ride them higher. The market kept falling. I held on, stubborn as a mule, certain I was smarter than the tape. I lost hundreds of thousands of dollars, holding positions I should have cut in days. Not because I didn't know better, because my ego wouldn't let me admit I was wrong. Here's the truth that took me years to accept. The market doesn't care about your opinion. It doesn't care if you're right or wrong. It only cares about price action. And when price is moving against you, there's only one intelligent response: cut the loss and move on. I developed a rule that saved me countless times. If a trade moves 7 to 10% against me, I'm out. No questions. No second guessing. No hoping. I take the loss, analyze what went wrong, and wait for the next opportunity. Because here's what most traders never understand. Taking a small loss is a victory. It means you live to trade another day. It means your capital is preserved for the next high probability setup. Losses aren't failures. They're the cost of doing business. The real failure is letting a small loss become a catastrophic one. Sin number 4, overtrading death by 1,000 cuts. There's a special kind of trader who destroys themselves slowly, not with one catastrophic loss, but with dozens of tiny cuts that bleed them dry. I call them the busy bees. They can't sit still. Every price movement is an opportunity. Every tip is worth acting on. They trade when they're bored. They trade when they're excited. They trade to make back losses. They trade to lock in gains. And slowly, methodically, they give all their money to the market in commissions and bad entries. I learned this lesson in Chicago, watching the wheat pits. There was a trader named Thompson. Sharp fellow, knew the fundamentals inside and out, but he couldn't help himself. He'd make 30, 40 trades a day, some wins, some losses, but at the end of the month he was always down. Why? Because in his frenzy of activity, he'd lost his edge. He was trading noise, not signals. He was reacting, not thinking. He was gambling, not trading. I asked him once, Thompson, how many of those trades today were truly high probability setups? He thought about it. Maybe 3? Then why did you make 37 trades? He had no answer. The market rewards patience, not activity. The great trades, the ones that make careers, don't come every day. Sometimes they don't come every week. But when they do come, they're obvious. The trend is clear. The volume confirms. The risk-reward is compelling. I made millions by making fewer than 20 trades some years. Not days, not weeks, years. Why? Because I was waiting for the market to practically hand me money on a silver platter. And when those moments came, I bet big with confidence. Quality over quantity. Always. Forever. Without exception. Sin number 5. Lack of patience and discipline. The character test. Now we come to the hardest lesson. The one that separates traders from gamblers. Winners from losers. Masters from apprentices. Patience. I know what you're thinking. Jesse, patience is boring. I want action. I want excitement. I want to make money. And that's exactly why you'll lose. The market is not a roulette wheel. It's not designed to give you constant stimulation and entertainment. It's designed to transfer money from the impatient to the patient, from the reactive to the thoughtful, from the gamblers to the traders. Let me tell you about 1915. The war was raging in Europe. The market was volatile, swinging wildly on every piece of news. Other traders were making dozens of trades a day, trying to catch every move. I did nothing. For months, I watched. I studied. I waited because I knew that the market would eventually give me a clear signal. A trend so obvious, so confirmed by volume and price action, that it would be like picking money up off the street. And it came. A clear bull market in steel and munitions. I entered with large positions, rode the trend for months, and made millions. All because I had the patience to wait for certainty and the discipline to act decisively when it arrived. Patience isn't passive, it's active preparation. It's studying the market every day, looking for your setup, and having the discipline to pass on everything that doesn't meet your criteria. Discipline isn't restriction, it's freedom. It's the freedom to walk away from bad trades, the freedom to cut losses without emotion, the freedom to let winners run without fear. Together, patience and discipline create something powerful, consistency. And in markets, consistency compounds into wealth. Now that you understand how traders destroy themselves, let me give you the antidote. The 4 pillars that saved my career more times than I can count. Pillar 1. Position sizing your life support system. Never, and I mean never, risk more than 2 to 5% of your capital on any single trade. I don't care how certain you are. I don't care if you have information from the company president himself. I don't care if every indicator is screaming BY, 2 to 5%, maximum. Why? Mathematics. Let's say you start with $100,000. If you risk 2% per trade and lose 10 trades in a row, which will happen eventually, you're down about 18% of your capital. You're bruised but alive. Now let's say you risk 20% per trade. After 5 losses in a row, you're down nearly 70%. You need a 200% return just to get back to even. You're finished. Position sizing is your shock absorber. It's what lets you survive the inevitable losing streaks that destroy amateur traders. Pillar 2. High probability setups. Stacking the odds. I never entered a trade unless I'd multiple confirmations. 1. A clear trend in my direction. 2. Volume confirming the move. 3. Price breaking through a significant level. 4. Risk reward of at least 3 to 1. If I didn't have all 4, I passed. Every single time. This meant I traded less, much less. But when I traded, I won more often and bigger. My win rate wasn't 90%, it was closer to 40 or 50%. But my winners were 3, 4, 5 times the size of my losers. That's the secret. You don't need to be right all the time. You just need your winners to dwarf your losers. Pillar 3. Capital preservation. Your sacred trust, protecting capital, is more important than making money. Read that again. It sounds backwards, but it's the truth. Your capital is your ammunition. Without it, you can't fight. You can't take advantage of opportunities. You're out of the game. I learned this after losing my fortune 3 times. Yes, 3 times. I made millions, lost it all, made it back, lost it again. Each time because I got reckless with capital preservation. The final time I came back, I made one ironclad rule: protect capital first, profit second. That meant cutting losses ruthlessly. It meant reducing position sizes during losing streaks. It meant walking away from trades that didn't meet my criteria, even when I desperately wanted back in the game. And it worked, because when the next great opportunity came, I had ammunition to deploy. Pillar 4, emotional control, the master skill. This is the hardest, the most elusive, the most valuable. The market is designed to trigger every destructive emotion you have. Fear when you should be greedy, greed when you should be fearful, hope when you should cut losses, panic when you should hold steady. I've seen men cry on the exchange floor. I've seen fistfights break out over losses. I've seen traders literally collapse from strain. The ones who survived, they learned to observe their emotions without being controlled by them. I developed a practice. Before every trade, I'd write down my entry price, my stop loss, and my profit target. Then I'd commit to following that plan no matter what. No matter if I felt confident or terrified. No matter if the stock was up or down. The plan was the plan. This removed emotion from execution. I'd already made the decision in a calm, rational state. All I had to do was follow through. Now, you might be wondering how these lessons apply to the markets we see today. And let me tell you something. The fundamentals never change. Whether it's railroad stocks or industrial shares, whether it's cotton or copper, whether we're in boom times or bust, the same psychological forces drive markets. The same fear and greed, the same over-leveraging that destroys accounts, the same tip-chasing that ruins men in bucket shops and wire rooms. Human nature doesn't change, the ticker tape doesn't lie, and the market rewards discipline, not intelligence or bravado. So here's what I want you to do right now. Take a moment, get out a piece of paper, and answer these questions honestly. 1. What percentage of your capital did you risk on your last trade? Was it disciplined or reckless? 2. Did you enter your last trade based on a high probability setup, or because you were bored, scared, or chasing? 3. Do you have a predetermined stop loss on every position, or are you hoping and praying? 4. Are you overtrading, making trades just to feel busy, or are you patiently waiting for your edge? 5. Can you cut losses without emotional pain, or does every loss feel like a personal failure? Be brutally honest, because the market will be. Most traders deserve to lose, not because they're stupid, not because they're unlucky, but because they refuse to master themselves. They want shortcuts, they want secrets, they want someone to hand them a system that wins every time. It doesn't exist. What does exist is this: a path of discipline, patience, and relentless self-improvement. A path where you study not just charts, but your own psychology. Where you win by surviving, not by gambling. Where you get rich slowly, not quickly. The market is the greatest teacher you'll ever have. It's completely honest. It doesn't lie. It doesn't flatter. It simply reflects back your own behavior with perfect accuracy. If you're disciplined, it rewards you. If you're reckless, it destroys you. If you're patient, it enriches you. If you're impulsive, it humiliates you. The question isn't whether the market will teach you. It will. The question is whether you'll survive long enough to learn the lessons. I'm going to leave you with one final thought, one final challenge. For the next 30 days, I want you to trade like I'm watching over your shoulder. Before every trade, ask yourself, would Jesse approve of this? Is my position size disciplined? Is this a high probability setup? Do I have a predetermined stop? Am I emotionally controlled? Do this for 30 days. Just 30 days. I promise you, your trading will transform, because you'll stop being a gambler and start being a trader. The market is waiting. It doesn't care about your past. It only cares about what you do next. Will you master yourself, or will you join the masses who deserve to lose? The choice, as always, is yours. This is Jesse Livermore. Trade smart, trade disciplined, and above all survive. If this lesson struck home, if it challenged you, if it made you uncomfortable, good. That discomfort is growth trying to happen. Tell your fellow traders which of the 5 deadly sins you struggle with most. Let's build a community of traders who refuse to be average. And remember, in this game, you don't get what you deserve. You get what you can withstand. Until next time.